Good afternoon, Africa. Welcome to another fresh edition of African Economy, the program, of course, where we break down the numbers, markets, and money moves shaping our continent. From the oil fields of Nigeria to the tech hubs of Nairobi, from the cocoa farms in Ghana to the trading floors of Johannesburg, we've got it all covered. I'm your host, Wang Fonabasi Walter, and together we'll journey through the stories behind the statistics, the policies behind the prices, and most importantly, the impact on you and me. So whether you are an entrepreneur, a student or worker, or simply a curious mind trying to understand how Africa's economy ticks, you are in the right place. Fasten your seatbelts because today's edition is packed with insight, analysis, and perspective you can't afford to miss. Here's what we are retracking today. South Africa's stock market continues its impressive run, smashing through the 107,500 milestone. The JSE was lifted by gold miners, tech firms and consumers companies, giving investors fresh confidence. But analysts caution that true resilience will only come when the economy diversifies more broadly beyond mining gains. Mauritius has emerged as Africa's most innovative economy in 2025, outranking Morocco and South Africa in the Global Innovation Index. Experts say Africa's larger economies must urgently invest in digital infrastructure, research and human capital if they are to close the innovation gap and compete globally. Nigeria is on the brink of an energy crisis as oil unions shut down critical institutions and the Dangote refinery. The dispute over layoffs and foreign dominance in $20 billion facility has sparked widespread shutdowns across the sector. And here is a food for thought. If Africa's largest oil producer cannot keep its refineries running without disruptions, how sustainable is its energy independence dream? In Kenya, microfinance banks face toughest test yet, with losses ballooning to 3.5 billion shillings in 2024 after nearly a decade of decline. For institutions meant to serve the poor, the collapse raises serious questions about sustainability. Economists suggest that stronger regulation, recapitalization and pivot to digital lending may be the only way to save the sector. Great to have you for this half-hour show. I am Wang Fonabasi Walter. And to begin, let's take a closer look at the financial market, starting with how the US dollar is performing against key African currencies. The US dollars against the Nigerian naira is at 1,481 naira per US dollar, indicating that the US dollar is dropping against the Nigerian naira at 4.870, a percentage of 0.33. The US dollars against the US dollars is gaining against the South African rand at 17 rand, indicating that the US dollars is gaining against the South African rand at 0.0411, a percentage of 0.24. The US dollars against the Zambian kwacha is at 23 kwacha, indicating that the US dollars is falling against the Zambian kwacha at 0.0250, and that is a percentage of 0.10. The US dollars against Egyptian pound is at 47 pound per US dollar, indicating that the US dollar is falling against the Egyptian pound at 0.1550, and that is a percentage of 0.032. The US dollars against the Algerian dinar is at 129 dinar per US dollar, showing that the US dollar is gaining against the Algerian dinar at 0.017, a percentage of 0.01. Across the continent, most currencies are showing mixed performance, with commodity-linked economies benefiting from rising gold and oil prices, while import-dependent nations continue to struggle with dollar scarcity. JSE index advanced 0.8% to surpass the 107,500 threshold, setting a fresh all-time high and extending gains for the second session, led by a strong rally in gold miners. Simbaya surged 4.4%, Harmony added 4.3%, DRD Gold gained 3%, Anglo Gold Ashanti rose to 2.6% and Goldfields advanced to 2.4%. Among non-resource shares, Boxer stood out with a 4.4% rise after reporting turnover growth of almost 14% for the first half year through August. Tech stocks added 1.9% and construction and materials stocks rose to 1.1%. Local shares are benefiting from a weaker dollar and the accompanying rise in gold prices, with markets factoring in the more Fed rate cut. This allowed the South African Reserve Bank to keep rate at the lowest since November 2022 this month. Mauritius tops Africa's innovation landscape in 2025 with a Global Innovation Index GII score of 32.5, ranking 53rd out of 139 countries worldwide. Morocco and South Africa completes the continental top 3, showing strong performance in science, technology and knowledge creation. Seychelles and Tunisia follow closely, sustaining steady progress in innovation ecosystems. Let's look at the chart indicating the Mauritius table. At the other end, according to the chart, Nigeria ranks 105th globally with a score of 21.1 alongside Rwanda with 104th, which is 21.1, signaling the need for stronger investment in research, digital infrastructure and human capital. Côte d'Ivoire and Zambia, both below 120 points, reflect countries where innovations remains under pressure with limited resources for scaling science, tech and entrepreneurship. Kenya's microfinance banks are battling deep financial distress, having posted consistent losses since 2016. From a profit of 1.0 billion kwacha in 2014, the sector slipped into negative territories, and by 2024, losses had ballooned to 3.5 billion kwacha. This represents a staggering negative 212.1%, beg your pardon, CAGR over the past decades, signaling that profitability has not just declined but collapsed. For institutions designed to provide financial access to undeserved populations, this trend paints a worrying picture regarding sustainability. Still in the eastern part of Africa, Kenya's microfinance banks have seen only marginal growth in deposit over the last decade, with a compound annual growth rate of 1.66% between 2014 and 2024. In 2014, deposits stood at 35.9 billion kwacha, and by 2024 they had reached 43.8 billion kwacha. Well, there were moments of strong growth, such as in 2021 when deposits reached 50.2 billion kwacha. The overall picture shows stagnation, with recent years trending downward. One of Africa's largest gold producers, Mali, has reportedly seen a sharp decline in gold production following a series of significant policy changes. Industrial gold production fell by 32% year-on-year by the end of August, missing governmental forecast. Disputes with Barrick Gold, including operational shutdowns and tax disagreement, have impacted output significantly. Meanwhile, regulatory uncertainty in Mali's mining industry is causing diminished investor confidence and production drops. You are still watching African Economy and Spectrum TV. When we return, we'll shift our focus to concerns on the commodity and petroleum sector. Stay with us. Thank you so much for staying with us. And now to the rest of the stories. 2023 alone, yam production were valued at an estimated $25.4 billion, the highest among major agricultural commodities, followed by cassava at $9.1 billion and maize at $3.9 billion. Together, these staples dominate both production and economic value, with cereals like rice and sorghum at 2.3 billion and 6.4 million tons, ranking next. Horticultural crops stand out in value per ton, led by okra at $818 per ton, tomatoes at $808 billion per ton, and pineapples at $754 per ton, highlighting the potential of a smaller volume, high-value crops. Legumes such as cowpeas and groundnut add a diversity to production. But the question is, are we fully harnessing this potential for food security, export and youth employment? To help us unpack this, I have with me Ms. Victoria Okon, a financial analyst, ICANN certified, with over 7 years experience and expertise across several sectors, including banking, oil and gas, maritime, local and international taxation. Currently co-managing and accounting consulting firm Rain Consulting in Lagos, Nigeria. She will shed more light on the opportunities and challenges in Nigeria's agricultural sector. Hello, Victoria.
Hello, good afternoon.
Good afternoon. Thank you for joining us on the show.
Thank you for having me.
All right. Okay. Nigeria's yam output was valued at $25.4 billion in 2023, far ahead cassava and maize. From an economic standpoint, what does this dominance mean for food security and export opportunities, and how can Nigeria leverage its beyond local consumption?
Oh, well, there's a lot behind that headline. However, I'll just, I'll just share a few lights. So, first and foremost, I think for dominance here in this subject would mean that staple calorie security, that's like point number one, because yams are a primary staple for millions of Nigerians. And so large and sufficient output would, would help a lot of households. With food availability and this doesn't even automatically mean that we have food security.
Okay.
Going across the whole country. However, economically, I would say that when measured, as crop value. Of course, yams they've dominated, or let's say, judging by the reports, okay, right? So yams have dominated crop values ranking in recent years, and that I would say has given the crop political or economic leverage,
okay,
for investments,
okay,
and policy attention. However, every reliance, on this could pose some risk. It's very important that we look through, or we look thoroughly. As we all know, this item or this particular crop is perishable in nature, and there are other factors. Again, I'd say that maybe I'm just going to list. I'm just going to maybe mention how Nigeria, in my opinion, so this is my opinion, I'm just going to mention how I think Nigeria can leverage, this dominance of this particular crop, beyond just consumption locally or beyond local consumption.
Okay.
So I'll just suggest that, so this is my take here. So we would want to target Nigerian diaspora communities, right? And maybe neighboring countries where demand is high. Now, the question here, or I'm responding to, how can we actually leverage, yam dominance beyond just local consumption? So I'm suggesting that we would want to target Nigerian diaspora communities and maybe neighboring countries where the demand is high, Also, maybe as a country, we would want to really improve basic, maybe post-harvest handlings, provide low-cost storage, maybe drying to reduce losses and improve quality for longer supply windows, because when we preserve this, if you preserve what you have enough, to actually export in this case. However, yes, it's also very important that, it's also very important that maybe you will also want to consider the finance and investment part to this, because I don't know, but I think that that's also a part that we want to consider. I mean, when you have tailored credit lines for processors and investors, that's like you're encouraging the guys who is in the farm, the people actually, so that way you want to give them access to credits or, some soft grants. That way you're making it easier for them.
All right. Okay, Ms. Victoria, can you hear us?
Okay.
Yes, let's go to this one. Yeah. Okay. Horticultural crops like okra, tomatoes, and pineapples command far higher value per ton. Briefly, yes, please. What financial or policy incentives would be needed to scale up investment in these high-value crops without neglecting staple production? Just one. It's fine. Thank you. Briefly.
Okay, so I would say maybe improve access to finance, low interest credit guarantees, or support, for the smallholders and, agribusinesses, producers. That way they can buy inputs, they can buy equipment, and, that's like a financial support, a financial incentive,
okay.
For them to be able to scale up, yes, investment in this, yeah.
All right. Thank you so much, Ms. Victoria, for joining us.
You're welcome.
All right. Now, while Nigeria's agricultural sector is proving its weight, major oil unions in Nigeria have initiated a strike, halting the operations of nationwide petroleum institutions. According to reports, the strike focused on disputes between unions and the Dangote refinery involving workforce layoffs and employment practices. And to help us unpack this, we now have our financial analyst, Mr. Olalekon, joining us now.
Hello, good afternoon.
Good afternoon. Thank you so much for joining us.
It's my pleasure. Thanks.
All right. First of all, how significant is this strike on Nigeria's economy in the short term, especially considering that petroleum is the backbone of our revenue and energy supply? Briefly, please.
Okay, so what happens is it tends to affect every critical sector we have across Nigeria in terms of transportation for our cars, energy for electricity, our diesel generating sets and all that. So it is quite enormous from the look of things. And yes, it is not something we should address lightly.
Looking at the allegations of mass layoffs and foreign workforce dominance, what ripple effects could these have on employment, local investment, confidence, and Nigeria's broader labor market?
Okay, so yeah, like we all heard from the news, Dangote Refinery is a private investment, and they are the liberty of carrying out their employment or otherwise regulations as they wish. However, because of the kind of industry where they operate in,
It's a bit sensitive, and sometimes that's why you have labor unions come up and say things like, why would you have to retrench or sack 800 people at a go? But then again, it tells us that our labor laws can actually be better than what we currently have.
Okay.
And I'm not sure in any part of the world you can sack 800 local
workers
workforce and replace them with foreigners easily, just like that. So that tells us a lot has to be done concerning our labor laws.
All right. From your perspective, what might be the long-term financial implications if this standoff between the unions and the Dangote refinery continues, particularly for fuel prices, foreign exchange, and the refinery's impact on Nigeria's self-sufficiency goals?
Okay, so to start with, there's an economic problem going on at the moment because I'm not sure there is supply to the Dangote refineries from the petroleum servicing industry. Secondly, if this goes on for a long time, then we begin to see the impacts on the downstream sector, and I'm talking about the petrol stations, because what you don't want is uncertainty across board. Once petrol stations have an idea that this strike will continue into the nearest future, many of them will stop selling petroleum products. The little they have, they may have to keep it, and the ones who sell will sell at exorbitant prices. So at the end of it all, we are going to have increase in the cost of petroleum products. We are going to experience shortages. We are going to experience, some people may start to adulterate petroleum products. And one of the reasons Dangote went into refining petroleum products in the first place was to reduce the cost of foreign exchange when it comes to refining the products outside to ease Naira. But now, if this continues for a long time, then fuel importers may be forced into going back to importing petrol, and that is not so good for the Naira because the Naira will weaken while the dollar would continue to be on the rise. So above every other situation, it doesn't look good economically for Nigeria, and something has to be done, and has to be done very quickly.
All right. Thank you. Thank you so much, Mr. Olalekan, for joining us on the show.
Thank you for having me. It's my pleasure.
All right. Lastly, in African economy, one of the most significant indicators of financial inclusion worldwide is account ownership, which refers to an individual's ability to own and manage a bank or mobile money account. Account ownership is especially important in Africa, where millions of individuals have historically been excluded from formal financial systems. According to the World Bank, 79% of adults worldwide own an account with financial institutions or mobile money providers. Account ownership rates varied significantly among countries, ranging from 100% in high-income economies to 15% in low-income economies like Niger. Since 2011, account ownership globally has risen from 51% to 79%, driven by significant increases in middle and low-income economies. Relating to banking institutions, 79% of adults globally have an account with a bank, credit union, microfinance institutions, post office, or mobile money provider. This is according to a report by the World Bank, which only reveals that account ownership rates differ significantly among economies. With that said, here are the African countries with the most account ownership. Top on the list is Kenya with 90% of account ownership. Second is Mauritius. Third is Ghana. Fourth is South Africa. Fifth is Senegal. Sixth is Namibia with 73% of account ownership. Sixth is, I beg your pardon, 7 is Uganda. 8 is Zambia. And the last is Gabon, amongst others. And that's all we have for you on African economy today. But before we go, let's take you through major concerns we have discussed today. In Nigeria, energy tensions escalated as oil unions shut down the Dangote refinery, sparking fears of a looming energy crisis. Our guest, analyst Mr. Olalekan Ayinde, emphasized the urgent need for labor reform, local workforce inclusion, and a sustainable resolution to avoid long-term economic shocks. And in agriculture, Nigeria's yam output profits hit a whopping $25.4 billion in 2023. Our guest, Ms. Victoria Okon, urged policymakers to unlock export potential, scale high-value crops, and ensure the sector works not just for food security, but for youth employment and global trade. Follow us on all of our social media handles for business update, and join us again on Thursday for another edition of African Economy. Thank you so much for watching. I am Wang Fonabasi Walter. Good afternoon, Africa.